Good afternoon, good evening, and good morning, wherever you are in the world, and welcome to Getting the Taxman to Pay You. What we like to do here is see if we can save on some piggy banks by getting the government to help you out rather than killing the piggy bank. Okay, so Getting the Taxman to Pay You. Introduction, just to give you an idea of why I'm here, why I can talk to you about this. My name is Robert Watterson. I'm a federally licensed tax professional and a provincially licensed financial professional. I have over closer to 35 years experience in forensic economics, forensic accounting, and have been working with corporations, personal finance, and taxation for that entire time. That's a long time. We have our own firm, Watterson Financial Solutions in Caledon, Ontario, as you see on the screen. My wife and I have been running that company since 1988. My wife, Sandy. Just as a quick tax disclaimer, just to let you know, everything that we discuss is in general and not specific to your tax case. So everybody's taxes are different. Everybody's individual rules are different. So we want to make sure that you do check to make sure that everything applies directly to you, and that you also notice that record keeping is important and required for taxation purposes. So why are you here? Are you here because you like paying taxes?
Nope.
Do you feel like you pay too much in taxes?
Yes.
Are you aware of the amount of taxes you pay in Canada? And actually, everywhere in the world. I hear a lot of times that people don't pay taxes anywhere except Canada and the U.S., which, that's really not true. Very, very not true. So, what about taxes? We have income tax, we have licenses, we have fees. So what types of licenses and fees? Did you realize that if you buy a hunting license or a fishing license, a driver's license, how about license plate renewal stickers? Dog tag licenses. Now, dog tags that you put on your pet are actually a tax, believe it or not. And then every time you want to feed your pet, you're also paying tax on that as well. And airline fees, one of the biggest ones. You'll notice whenever you buy an airline ticket, there's a small fee at the beginning of the ticket, that's for the airline. There's a small fee that's at the middle of the ticket, that's for the government. And then another small fee that goes to the airline at the end. The government gets the lion's share of everything. And then, of course, etc., etc., etc. And that's the part that hurts the most, because that can be HST, GST, PST, state tax, gas tax, fuel tax, anything you want, the government will find a way to tax it. And how much do you actually pay? Well, the amount of tax that you pay each year on income tax is only calculated one time each year. So one day of the year you know the amount of tax, and that actually happens in the following year. So this year you never know the exact amount of tax you pay. You have to wait till next year when you file your taxes, and depending upon how you file your taxes, if you use a tax preparer or you do it on your own, is going to determine how much you pay and how much of what you pay or don't pay that you get to keep. All right, so we want to make sure that you know that the tax rates in Canada are extremely complicated. It's a small book. It's on the internet. It's about 34,000 pages. You can look it up anytime and have a nice little read. And you can look at your pay stub. There's a number of items on your pay stub. If you're looking at it in Canada, you'll see a thing called Fed tax, Prov tax, EI, and CPP. All three of them are types of taxes. Prov tax and Fed tax are income tax. EI and CPP are cash that goes to the government that you may or may not ever see a benefit from. You never know. And also, one of the things that you are going to be seeing very soon in Ontario is ORRP or ORPP, one or the other. Ontario Retirement Pension Plan. So our ORPP will be hitting a pay stub near you very soon. The government feels that they have a better way of saving than you do. So they're going to take a little bit more of your money.
Wow.
They're going to put it away in a very special space and give it to all kinds of different projects and tell you that you'll get a pension when you retire. Tax Freedom Day, as you know, or as you may have heard of, falls on different days. The only reason I discuss this is if you look at the tax freedom days that we're over the years, in 2010 it was in January. Now it's in April. And this is US only, and only to deal with income tax, not all of the other types of taxes that we pay. So when you add up all the other types of taxes, the Tax Freedom Day actually ends up being sometime in July. Now, of course, all the other taxes are HST and fuel tax and CPP and EI and everything like that gets added on. I just wanted to show you how far it has gone from 5% to 31%. And that's in the US. Canada is a little bit steeper, but Canada doesn't want to give us most of that information. The information is not readily available because we have been in election mode since about 2009. And I don't know if you know politicians very well, but they don't like to talk much, especially during election. So this just gives you an idea of some of the countries that pay income tax. And you'll notice United States is here. 114 days out of the year you pay tax. The rest of the time the tax is already paid and you don't have to pay it anymore. So only the first 114 days out of 365 go directly to the government in the US. And that's at 31%. And this was 2015. The scary part is we have to go to the next page to find Canada. In Canada, way up here at the top, it's 157 days, June 6th being the Tax Freedom Day, and that was in 2009. The information hasn't been released since 2009, and I'm not sure if you've noticed, but the calendar has changed a number of times since 2009. However, I don't think anybody's noticed a tax reduction in that time. In fact, the amount that they're claiming is 42.6, and right now we're closer to 48%, 47.7, 47.9 in 2015. So, how does this tax thing really work? This is scary. The reason this is scary is that you have to actually stop and think about the way the Fraser Institute does things. They always look at averages. So they have taken the average couple, and they've said the average couple in Canada being 50 years of age, earning $80,000 a year, meaning that one person works full-time or both people work quite a bit but not full-time. That couple is going to end up paying $34,167 out of that $80,000 in income tax. Now, a few years ago, we were told that if you earn between $75,000 and $80,000 a year per family, you were looking pretty good. Now, if you earn $80,000, $35,000 goes to the government. So how much do you get to keep? We're at $45,000 that you actually get to keep. And that is very, very hard for two people to live on, especially if you have anything to do with mortgage, car payments. If you've had children, children are an expense that can keep on giving or taking. As you know, children are going to need more and more and more help every year as the economy continues to change. For example, in 1962, you could buy a house for $26,000. The same house is $400,000 today. So it's going to be very difficult for our kids to be able to afford to purchase without our assistance. And we're not going to have the money to help them. Based on the way the economy is going, where is that money going to come from? So, would you like to learn the benefits of how having a home-based business will increase your tax deductions and tax savings? You'll notice I don't say refund, because refund is simply the equation or the answer to the equation of having tax deductions. The more tax deductions you have, the lower your taxes are, the higher your savings are, the higher your refund will be. If you're if you're working in North America and you have a full-time job, you are overpaying income tax to the tune of $2,000 to $10,000 every single year. according to Sandy Botkins, Chief Counsel for the IRS, and author and CPA, tax attorney. So if he's a CPA and a tax attorney and general counsel, and he tells us you're overpaying taxes, and I'm telling you you're overpaying taxes, being a forensic accountant, I've seen thousands of tax returns, and I've actually seen where people are overpaying taxes as much as $17,000 in 1 year I've seen on a tax return. So, Robert Kiyosaki lets us know tax rules or tax laws are not fair. They are written by the rich, for the rich, and if you want to be rich, you have to use the same tax laws the rich use. Now, most of us are afraid to use the same tax laws the rich use because we don't think we're allowed to. Why would you be allowed to not pay tax? Why would you be allowed to be the Prime Minister of the country, have a company that earns $2 billion a year and pays zero tax? Well, because that's the way the tax laws are written, and that's the tax laws for the rich, by the rich. So, what types of expenses can you claim? Well, the rules about what you can deduct can be very complicated, especially depending on the jurisdiction you live in. In Canada, the rules are the same coast to coast. When you live in the United States or in some European countries, the rules and the way that the rules are applied are different. So you have to look at the exact way they're implemented. But for Canada, you can look on the CRA website, and we can help you with some in just one moment. Because we're going to ask Sandy Botkins. Again, Sandy Botkins is a U.S. professional. He's a U.S. specialist, but he also does Canadian tax as well. And one of the things that we have to be very straightforward about and read really carefully, because it actually does say this, you would have to be brain dead not to start a home-based business, according to Sandy Botkins. Because we can save $2,000 to $10,000 every year by writing off internet connections, cell phone services, computers, business startup costs, advertising costs, trips that involve your business. Now, if your business is located in a small town and you're at or even a large town, but you're at an intersection and you buy all your product locally, you can't travel and claim it. If your business can sell products or sell the business anywhere in the world that you travel can be an expense, so you can tax deduct a trip to anywhere in the world. It doesn't matter where that trip is. Also, a percentage of your rent or mortgage, and this can be substantial, because we're not talking about small things. When you look at your mortgage, if you own a home, have you ever stopped to consider how much in total you pay for interest, insurance, property tax, utilities, repairs and maintenance? If you need a new driveway, does the government come and replace your driveway? No. However, if you own your own business, you can take the cost of the repair and deduct a portion of it from your income tax. If you need a new roof, you can deduct a portion. So it can be a very, very substantial amount of money. Remembering that all of these deductions help to reduce the amount of income tax you pay, as well as reduce the rate of income tax you pay. So it works for you in two ways. It's very exciting for somebody who enjoys taxes. I know most people think that if you enjoy taxes, you must be crazy. It's okay, I'm nuts, because I love them. So here's a list and all the types of expenses that you can deduct, and we do have that on paper and available. For the people here in the audience, we will be giving them a copy, as well as we'll go over exactly how this would apply. So your cell phone bill, for example, at $120 a month would be $1,440 a year. Your internet connection of $100 a month will give you a $1,200 a year deduction. Meal expense at 50%. Meals and entertainment are only deductible at 50%, so the 50% rule means that this $250 deduction is actually $500 per month. Now that's all your meals and entertainment, anything that happens outside of the home that has to do with your business. Log what it is and you can deduct it. Office expenses, here we have a very low amount, only $100 a month. But if you're not quite sure what can be expensed in your office, your home office, stand at the doorway to your office, scan all the way from the right side of the room, 180 degrees around to the left side of the room. Everything in your site, everything you saw is 100% tax deductible when you purchase it. So if you buy a desk, a computer, a printer, paper, ink, a chalkboard, anything, rugs, pictures for the wall to make the room, the environment more inviting, frames for documents, awards that you have won or been presented with. It's all tax deductible at 100%. So $100 is very, very low amount. Travel expense, in this case, we're only claiming one trip. The gentleman, that this is an actual claim that we did in 2015 for the 2014 tax year. You'll notice is only $1,856. He flew to Las Vegas and spent 3 or 4 days with the 6-figure earners in the multi-level marketing business to get the feel for what it's like to be a 6-figure earner. That's tax deductible. Promotion expense, we have a very low amount of $169 amount included. Now, rent here is blank. We don't have any amount in here for rent. That's because this gentleman was living at home at the time of his 2014 tax year. He has since bought a home, so now he'll be able to claim a lot more expenses. But when you look at the form yourself, fill in the numbers that you feel are accurate for you. So if you own your own home, in here you would put in 20 to 25%, depending upon how much space in your house you use for business, of your mortgage interest, property tax, utilities, fees, government fees for anything, water, that sort of thing, repairs and maintenance. You decide you need to paint a wall. Your wife wants a room wallpapered. Let her do the wallpapering. At least that's how it works in our household. I help with the painting. She helps me do the wallpapering, but she has to be there or it doesn't go up. Or hire somebody, and you can write off that too. That's an even better idea. And also, of course, the purchase of any business. So the upstart costs of any business that you're going to run. Now we're talking about home-based business, so we're putting in an amount of $3,500 a month. $3,500 a month is less than a brick and mortar style business. Or sorry, $3,500 per year. It's going to cost you more than $3,500 a month to run a brick and mortar business, and guaranteed you have lots of expenses and no guarantee you have any income. Okay, so that comes out to around $14,230. If we look at auto expenses, you notice up here we just said see below. If you don't have a car, your transit expenses can be claimed. If it's transportation to an event or any sort of business trip, anywhere where you're going for business, it's 100% deductible. If it's auto expenses, we can claim insurance at $410 a month. Fuel he has at $400 a month. Maintenance at $100 a month. And lease finance at $500 a month. Now lease or finance is pretty straightforward. I do get the question a lot. It's a very frequently asked question. Should I lease or should I finance? The answer is whatever the best deal you can get, take the best deal possible. Because if you finance it, we can write off a portion of the interest and a portion of the depreciation of the vehicle, up to 30% of the vehicle cost per year. If you lease, we can write off a portion of the entire lease. And either way, we come out to $500 a month here. When we bring all these figures over for the annual amount, it's $16,920. Now, I highly recommend you keep a mileage log of everywhere you travel and what you're doing, is pretty simple. Just get a calendar book that has I guess they call them purse calendar, has every day of the week on it. Just make a note of where you're going each day. Set your trip tick to 0. Go on your merry way. Have a great time. Go to your meeting. Sell your product. Launch your reps, whatever it is you're doing. When you come home, record the number that your trip tick tells you. That's how far you traveled that day. Therefore, you now know how much mileage. Once a year, you record the odometer reading on the car or take a photograph of it. Usually January 1st to December 31st is a good time to do that. So when we take the $16,920, and this gentleman has a full-time job, so he's only claiming 50% of his expenses for the vehicle as business expense. Now you'll notice that most of the expenses that we've seen here, you're already spending. You already drive a car, you already have a cell phone, you already have the internet, you already have a roof over your head, I hope. If not, you need this business even more. Most of these things are happening anyway. Most of you like to travel. Now, the travel can be tax deductible. So pretty well everything that's on here, you're already spending this money. How about getting some of it back? Well, how do we do that? Well, in this case, the gentleman earned $60,000 a year. At his place of employment, the boss deducts EI, CPP, and income tax from his paycheck. So when he does that, if he does the correct amount, we take the 50% of the auto expense, the total amount of the annual expenses, we add them together to come up with $22,690 worth of tax deductions. If his income is reduced because of this amount, it brings him down to around a 31% income level. So he's paying income tax at 31% on $60,000. And we're going to take $22,690 off of that, therefore giving him a return on expenses of around $7,034. Now, on March 25th, the government actually made a deposit to his bank account for $7,032.74. So just a few pennies off. There's always a little bit of rounding and calculations back and forth, but pretty close to the amount that he had expected as a tax refund. He was pretty happy. So, how do we track these expenses? This is the most important part, because no matter what you claim as expenses, you have to be able to prove your expenses at the end of the year, so that two things can happen. Number one, you can file your tax return. Without numbers, we don't know what to write down on your tax return. The second one is, once you file your tax return, we want you to be able to keep that money. So we don't want Revenue Canada coming back that year or following year or 2 years or 5 years later and claim the money back because you're not able to substantiate it. So we want to track the expenses. How do we do that? First thing is we keep everything. All invoices, all receipts, all bills, everything. And make notes. Be detailed on the notes that you write on the paperwork. You have a bill, you want to make sure you know what that bill is for. Now, you make notes on that bill as if you need to explain it 4 years from now, not tomorrow. Because Revenue Canada never asks you what you did last Tuesday. They always ask you what you did 3 or 4 years ago. So we need to be able to tell them. Because if you can't tell them, I can't tell them. We need to be able to explain it. So you need to keep notes. You need to be detailed. You need to put down who, what, when. So you become a reporter. Remember when you were in school and they told you to make a story? Who, what, when, where, why? Same thing. There's online tools to help keep track of it. There are tools or simple spreadsheets that you can use. There are tools on your phone, both Android and Apple. And you can use a car mileage log or just a simple calendar book. You can use a 12-month folio from Staples or any other stationery store. It's just a filing accordion-style file. It has January to February, March, April, right through to December dividers in it. Drop all your invoices and bills and receipts in there. That keeps track of it for you. It helps it keep it a little simpler. But at some point in time, add up those receipts. so that you know what the numbers are and how you can use them. What else do you need to do? You need, and this is sort of a repeat of what I just said, but you need to hear it again. Write down what it's for. If you pay for something on the internet, hit print. Keep that piece of paper. The paper, the ink is tax deductible. If you don't hit print and you forget about the receipt, you can't deduct it. If you're out at a meal, write down who was there. If you're at a business meeting, they keep track of who comes in and goes from business meetings. Rewrite the date and the amount on the receipts that will fade, or take a picture of it, right? Any of the types of receipts from the gas station or the restaurants, anything on thermal paper, 6-7 months from now, it's a blank piece of paper. Rewrite the date, the amount, write down who was there, what it was for, right? What was the purpose of the meeting, whether it be introduction, tour, presentation, training. Any type of training and self-improvement that you do is tax deductible. So when you do anything that helps you to be able to do your business better, it can be tax deductible. Even if you have to travel to do that, the travel can be tax deductible as well. Also joining or launching a business, and follow-up. The softest, most expensive expense you'll have is follow-up, because it doesn't really cost you much to do follow-up. However, if you don't do follow-up, and what can you do to follow up? Well, you can make a cell phone call, you can send somebody an email, you can write somebody a note, you can drop by and have a coffee, you can take somebody out for coffee, anything. However, if you do no follow-up, you have no business. So it's the most expensive expense you can have. It can cost you your entire business. So there, on rgwt.com, on the left-hand side, there's a bar that has some information there on tax, on all kinds of different things. When you look under the tax portion, there is a sample of a spreadsheet to help keep track of expenses, if you'd like to check that out. What else do you need? Well, first thing you need to know is that most of what we've talked about tonight is for taxes on sole proprietorships. You need to complete a T2125 form, Statement of Business Commission and Professional Activities, for Revenue Canada once a year, and it must be attached to your standard T1 General Tax Return. You can see a copy of it at www.cra. Just look up the forms. You also, in the U.S., you have to file a Schedule C to the 1040, and you need the totals. You need to total your expenses, because without a total of the amount of fuel, the amount of hydro, the amount of property tax, the amount of interest, your car loan, your car payment, or your lease payment, we don't know how to calculate it. We need those numbers. So there's two ways to get the numbers. There's always two ways to do it. You can calculate it, or I can calculate it. You can do it for free while you're sitting down watching Desperate Housewives, or any other TV show you like in the evening after you've done your forensic networking, or you can pay me to do it for you. And you need a good retirement plan. Any business you have today, even if it's a job, no matter what you do today, you need a good retirement plan. Because if you think your boss or your government is going to take care of you in retirement, you're going to have a very lean retirement plan. Right now, the government is looking for ways to get seniors into the job force. We should be looking for ways of getting teens and 20s into their job force, not 65 to 70-year-olds. But that's our government today. You also need to know, do not try this on your own. If you are not experienced tax preparer, do not prepare T2125 without help. Get some assistance. I recommend that you use a tax professional with a business background, or a business professional with a tax background. The reason for that is the T2125 form must be completed fully and correctly to be accepted by Revenue Canada. Even then, it can be audited, and we want to be able to stand up to any audit that we have. I always suggest you take very in-depth care in the hiring of your tax professional. Not all tax professionals are business experts. They don't all understand how business works. For some reason, they like to tell you not to bother. I've heard them say everything from don't bother filing your small business tax return, you don't need to worry about it, you didn't make enough money, you can't write it off unless you have a profit, all kinds of garbage like that, right down to receiving an NOA that says you owe X number of dollars that you didn't expect to owe, and they just say, well, just pay it. Those are all wrong. First of all, if you have a small business, you must declare it. You need to file the paperwork properly. If you have an NOA, if you receive an NOA from the government that says, oh, you owe $2,000, you don't write the government a check for $2,000. If you had a sudden bill come in from Hydro that said, hey, you owe $2,000, would you write a check for $2,000? No, you'd question it. Revenue Canada sends you a notice that you owe them money, question it. And make sure you talk to your tax preparer, tax specialist about it. Because 9 times out of 10, okay, so officially 8 times out of 10, 80% of notice of assessments are incorrect. Revenue Canada has made mistakes. So not all tax preparers are created equal. The fun part, do you want to work tire or retire? Right? It's not about how much you can earn, it's about how much you get to keep. So, when you do a retirement or a work-tirement, and why do we say that? Well, let's take a look at a few things for a minute. How much money per month income will you need in retirement? Now stop and think about it as if you were retiring today. Maybe your mortgage is paid off, but you're still paying it today. But let's say today's dollars. Because as you know, every year a dollar becomes worth less. But let's just look at today's dollars for a minute. Will you be able to live on $1,000 a month? If you were retiring today with no mortgage, no payments, never having any kids, and you're not that fond of eating, you might be able to survive on $1,000 a month. How about $2,000 a month? Or will you need something more along the lines of $5,000 a month income? Don't forget, the government wants to tax it. Even the income you get from the government in retirement is taxable. So they give it to you in one hand, they take it back in another. That's the way the government works. They never give you something and say, don't worry about it. Right? So there's always a tax on it. So that $5,000 becomes $3,600. $3,600 isn't quite $5,000 anymore, is it? No. Mortgage. Most people retire today with a mortgage. Most people retire today with an appetite. These are things we have to take care of. So, Forbes magazine did a survey in 2015 asking how many North American middle-class people felt that they would be able to retire or they would work until they died. 52% said that they would work until they died. That's a pretty bad number, wouldn't you think? 52% of all middle-class Americans believe that they're going to die before they could retire. Unfortunately, they're wrong. It's closer to 83%. Will work until they die or die before they retire. They'll either be dead broke or just plain dead. 17% get to retire. 5% of those, 5% get to retire the way they wanted to, and 1% are the illustrious 1% we've always heard of, and that half of those people will be GWT reps, I'm sure, but they're the 1%. The reason for that is that if you wanted to retire with $5,000, you have to have $1.2 million saved to have $5,000 income. And that's only if you can earn 5%. Now, most places don't have interest anymore. Canada is one of the few countries that actually has any interest rate, but it's 0.5. Nowhere near 5%. If you're lucky and you're invested with a really good company, you might be able to get 3%. So that's going to be a much higher number than 1.2 million. If you need $10,000 a month to retire on, you need to have $2.4 million saved at 5% to be able to retire and have a $10,000 a month income. There's another way of looking at it though, because if we look at it from the other side of the street, if you have a income of $5,000 per month, that's equivalent of having $1.2 million in the bank. Or if you have a residual income of $10,000, that's the equivalent of having $2.4 million in the bank at 5%. So if you have an income that is $10,000 or more residual income, and there are people in the audience going, yay, because they already do, congratulations, you're a multimillionaire. We have a multimillionaire in the audience right now waving around a baby. I wonder why. When you're a millionaire, you can have all the children you like. So, where is the money going to come from when you retire? The government? Well, Social Security and Canada Pension, Old Age Security, Guaranteed Income Supplement, all together total about $900 a month. Taxable. You can have RRSPs. If you save RRSPs, if you put $5,000 a year away for 21 years at 5%, you'll have $186,000 saved. That $186,000 will provide you with $950 per month after tax today. 20 years from now, it may be $700. We don't know what tax rates will not be going down. So we'll have to look at it and see. Corporate pension plans. Some people have some very good corporate pension plans, which we may allow you to have another $1,000 or $2,000 a month. Even if we add all these up, let's say you have $2,000 corporate, $1,000 coming from RRSP, $1,000 coming from the government, it's $4,000. We haven't hit $5,000 yet. And don't forget, the government is going to tax it. So it's going to be a lot less than that. If you have an individual retirement plan, which is a form of an RRSP, or you can work tired. Be a Walmart greeter, working at McDonald's maybe. Would you like fries with that? Or you could have a strategic retirement plan that you control. So would you look, if you were to look at your tax savings right now and look at your retirement planning and how it is set up right now, will your mortgage be paid off before you retire? Will you have enough income in retirement after your mortgage is paid and after the income tax is paid based on what you have today? Don't forget mortgage, utilities, travel, medical expenses, car, helping your children. These are expenses that don't go away. You don't have a magic mortgage that when you pay off your mortgage, they suddenly pay your property tax and your utilities for you. When you pay off your mortgage, you simply have to pay them yourself. You still have expenses even when you have no mortgage. So let's talk for a minute about a business that is a retirement plan all in one. Why? Because it provides residual income. What is residual income? Residual income is income that you earn over and over and over for something you did once. So you do it one day and it pays you tomorrow and every tomorrow for the rest of your life and beyond. That's residual income. So if you were a Michael Jackson fan, you may understand that a little bit clearer. Whereas today, Michael Jackson's family makes more money and has more money than when Michael Jackson was alive, because they still make residual income off of every record he wrote. Every time they played on the radio station or something like that, a check goes to the children. His children are richer than he was when he passed away. Why? Well, their property's gone up in value. Their residuals have gone up. All of their value, everything goes up in value because their dad worked when he was alive. So, if you could have a business that saved you $3,000 to $9,000 or $2,000 to $10,000 every year while you're building it, and once you get it moving and growing and providing you with a residual income, it could provide a residual income that continues to grow, that you contribute to, and that can fully fund your retirement. Wouldn't that be a solution? A potential for being able to solve both problems? Saving on income tax today and building for tomorrow, all in one shot. Seize the moment. I don't know if you can see that very well, but this is a yacht that was parked in Antigua while we were there for a week. Definitely seize the moment. Stop and think for a minute, what are you going to do in retirement? The definition of insanity, according to Albert Einstein, is doing the same thing over and over and over and over again and expecting a different outcome. So if you've been doing the same thing over and over and over and over again and you still haven't gotten rich, it's time to look at something different. Time to take a step back and do something a little bit different. Global wealth trade is the freedom business. Proven, lucrative, and it sells itself. Any questions? Anybody have any questions or anything? So our contact information, again, of course, if you have any questions or you require further information, is Watterson Financial Solutions in Caledon, Ontario, or on Facebook at Watterson Financial Solutions, Inc., or Robert Watterson. And my email is rwatterson@rogers.com. Thank you very much for your time, and enjoy the rest of your night.
Excuse me, we are by this.
I don't know.